Welcome back. You're watching Indian Open. Let's start by taking a look at Asian markets and see what they are doing. Not too much for the Nikkei. However, there has been some strength for the Shanghai and the Hang Seng. Both of them are looking up, in fact, by quite a bit. So it's certainly turning out to be a good day of trade for some of these Chinese indices. But let's move on and talk about the impact it may have had on the SGX Nifty futures. Also looking at a positive up higher by around 0.3%. So, well, all in all, it's turning out to be a reasonably good morning for all exchanges which are open in Asia. But that said, let's also talk about what we can expect and what we can see as far as the futures options space is concerned in India. And I'm going to start off with the Nifty futures. Of course, it was expiry, and that's the reason why we are looking at a 45% increase in OI. The rollovers have not been up to mark, a tad, rather notch below the previous 3-month average for the Nifty futures. The Nifty banking futures, again, rollovers just slightly lower, but we did see an open interest increase of around 41%. Moving on to your open interest distribution, what we are keeping an eye on is around the 12,200 mark, where there has been some amount of accumulation in open interest coming down to, this is of course a change, and that has resulted into 12,200 as the one with the max OI. That's the call. And in terms of puts, we are looking at accumulation around the 12,000 call, 12,000 put. So we'll be watching out for these levels. It's a 200 odd point range. The wicks fell further, down by around 4.5%, and it's at 11.12. And of course, the Nifty put call ratio also came off to around 1.3 against 1.5 across all series. And in terms of stocks, watching out for something like a Castrol India, PVR, and Tata Power. All of them have seen quite a bit of a surge and increase in open interest. HCL Tech and Mahanagar Gas, not too much movement in terms of spot prices, but well, gains in open interest all the same. Of course, it is the first day of the January series, so naturally we are going to see such a big increase in open interest. Let's see how things pan out eventually as we move into, well, trade over the next few days.
Well, let's try and talk about the trade in the near term as also over the next few days with Siddhartha Khemka, Vice President and Head of Research at Motilal Oswal, joins us right now on the show. Siddhartha, good morning. As always, good having you. Thanks much for taking the time out and speaking to us at BloombergQuint. What's the sense today? What was the mood in the dealing room? Are you guys more bullish than bearish? What are the key things that you are taking note of today?
Yeah, good morning, and it's a pleasure being on your show. Wishing everyone at BloombergQuint as well as the viewers warm and happy new year in advance. Coming to the market, so the mood is not that bad. The mood is quite optimistic getting into 2020. We have seen 2019 now coming to an end with the unique market polarization that has happened in this year. Something that we expect should continue for some more time, given that the way the economic growth is looking at, and the earnings which are yet to see some revival. So in this environment where the few companies which have been consistently reporting decent numbers, along with a good management quality and decent valuation, that is where we believe the opportunity could continue for some more time. Overall, if you see on the overall market for today and for the near term, don't expect much of a movement. We are already above 12,000. That doesn't leave much room from a valuation perspective on the index level. What could happen is a lot of rotation within the index and among the sectors. That is possible going into 2020, and that is a theme that we are expecting to play out over the next few quarters.
And where are you expecting this rotation to come through for, Siddhartha?
So if you see some of the sectors where we believe the growth could pick up and the quality companies are available, for example, capital goods sector, for example, another sector that we believe could play out over the next few quarters is cement. So these are some pockets where we believe some rotation could happen.
I think the morning note today speaks about UltraTech Cement. Maybe we could just speak briefly about that one, Siddhartha, first, before we talk about the stocks in news.
Yeah, so we have been looking at UltraTech positively for quite some time. We recently met the CFO and came with this note today. So what we are looking at incrementally is that the growth in Q4 is looking better, is what the management is saying. Overall, if you see, the company is most of the capex is done with. There is hardly any new capacity that is coming in, and with the two new acquisitions that they have done, the contribution from the north and west region has increased to 45%. And if you see regionally, these are the two stronger regions in terms of pricing and demand. So that gives a good overall structure to the company. And as I said, most of the capex is now done with the current capacity utilization around 70%. That is expected to improve going forward. Along with that, we are expecting free cash flow generation next 2 years. That should lead to improvement in ROEs, almost 550 basis points over the next 2 years, and that should lead to a re-rating on the valuation. Coming to valuation, at 11 times EV EBITDA, we believe that the stock is trading at a significant discount to it. It owns long-term average. If you see its last 10-year average, it is trading at a almost 15-20% discount, and almost a 30% discount to its peer, which is Shree Cement. Even on a EV per ton basis, it is currently around 152, which we believe the company, given its capacity and profile, should trade at a higher valuation. So we believe a 180 kind of a EV per ton is a decent valuation for the stock. So that kind of upside is something that we expect in UltraTech going forward.
Okay, hold that thought, Siddhartha. We'll just come back to you once we discuss all the stocks which are there in focus today. And of course, we also have a broking note today, telling us a little more about the prospects for Dixon Technologies. But we'll get in our research team here. Thanks, guys, for joining us. Nikki, let's start with you. What do you have in stocks and news?
Sure, I'm going to start off with Hindustan Aeronautics, where CARE has downgraded the long-term rating facilities for this counter. It's downgraded for worth around 7,300 crore to AA plus, positive from AAA. Not cited the reason, said that that's going to be coming in separately, but then outlook has remained unchanged. We expect some kind of negative reaction. Adani Ports, where institutional stake is going up. LIC has increased the stake to close to 12% now, from 9.5% or 9.8% rather earlier. Rating agencies, they are expected to be in focus, especially CARE Rating and ICRA, given that SEBI has slapped a fine of around 25 lakh each on each of this player, saying failure to exercise proper skill, care and due diligence in rating NCDs of IL&FS. They said that despite the declining indicators or the deteriorating fundamentals of the company, both of these rating agencies have assigned a higher rating to the counter. Also, there seem to be rise in defaults. Sickle Logistic now, this is one counter which has been hitting a lower circuit in the last two sessions and has reported on exchanges that the company is going to be defaulting on NCDs interest worth around 5.5 crore. So that's a big amount coming in, and that is going to be probably on December 27 due to cash flow mismatch. Also, we're looking at Simplex Infra. Now, the stock has been in traction from a couple of days. Last 3 to 4 sessions, actually, you've seen a good run. But then the company has already defaulted in a payment of NCD's interest worth around 4.85 crore, which was due on December 26. In terms of bulk deal, Dishman Carbogen, well, that again makes it to the list again here, though the counter saw an uptick of roughly 10% in previous session of trade. But then we've seen continuous selling happening from Motilal Oswal. This time around, they've offloaded stake to an extent of 1.2% in this counter.
All right, and Sumit, we have a note on Dixon this morning.
Well, yes, MK has maintained its buy rating on the stock and now hiked the target price to 4,475 from 3,605 rupees. The brokerage says that the management has remained upbeat on the sustaining volume growth in the consumer electronics segment of the company, and that is on the back of the strong order book from MIFO FY21 and agreement closure with large customers soon. It is also increasing its capacity from 3.6 million ton to 4.8 million units going forward. Along with this, the capacity addition for fully automatic washing machine is also on track, and the management is expecting a volume ramp up from the second half of financial year 2021. But the company is also expecting another customer win in the semi-automatic segment, apart from recent onboarding of the large domestic player. Along with this, if you see, The opportunity that the brokerage sees in the export business of the lighting segment is expected to begin from financial year 2021 can be significant according to the brokerage. And lastly, it says that automation and cost optimization will drive the further margin expansion for the company. Now they have the brokerage has hiked its FY21 and FY22 EBITDA estimates by 10% each on the back of all these factors, and that's the reason they have also hiked the target price to around 4,475 rupees for Dixon Technologies.
All right, thanks guys for joining us and getting us those updates. But Siddhartha, I'm going to take up another note that I read of Motilal Oswal very recently on Tata Global Beverages. Now, in terms of earnings prospects, well, things certainly look up, but how would you rate that against the rest of the FMCG pack in terms of what it has in store going ahead in the near term?
Yeah, so we initiated a few months back on Tata Global, and we have been quite positive now on the stock. One is the merger or the restructuring within the Tata Group with the consumer business of Tata Chemicals getting merged with Tata Global. That will give more focus of the company on the Indian businesses, which we believe is on a strong growth path, and that should lead to a good growth for the overall business. Given the synergies between the other India-focused consumer businesses and the consumer businesses from Tata Chemicals. Given that the company is now getting restructured, we believe that the return ratios as well as the growth will now pick up, and it's a consumer company in the making, and hence it is right now trading at a significant discount to other pure consumer plays, the FMCG companies. With the improvement in numbers, we expect that this valuation catch-up should also happen going forward. Again, another business is, if you see the tea business, again the core Tata Global business, the focus is on key regions where they have hived off or sold off some of the loss-making units globally, and the focus is clearly on India and UK, where we believe that again growth should be stronger compared to what it used to be earlier. So overall, as I said, valuations are comfortable compared to other FMCG peers, and with catch-up in the numbers as well as return ratios, we think that the valuation catch-up should also happen over the next few years.
By the way, we'll also talk about some of the other names today with Siddhartha, if we track some of those, and we'll get in a technical perspective too. The likes of Whirlpool, which was up 7% in yesterday's session and hit fresh life highs for itself, or Phoenix Mills, which is a real estate name and has done exceedingly well, trading at fresh 52-week highs for itself in the specialty chemical space, which is also doing very well for itself. The likes of Navin Fluorine, Deepak Nitrite, etc. are doing well. Siddharth, do you have coverage on these cooling solution names? Voltas, Whirlpool, Blue Star, etc. We were talking to Blue Star yesterday, and they were optimistic of the annual numbers being around 10%, even if this quarter goes a bit low. But while Voltas and Whirlpool, Blue Star might be a bit subdued compared to Whirlpool, Whirlpool is in another orbit. It was up 7% yesterday too. What's happening here?
Yeah, so we do have coverage on Blue Star and Voltas. Right now we are not covering the Whirlpool as of now. So in this space right now, our topic is Voltas, where we believe that their market leadership should continue. In between, we had some developments and news flows with regards to Samsung re-entering the window AC as well as the non-inverter segment, leading to some market share loss for some of these larger players, including Voltas as well as Blue Star. Now, if you see Whirlpool, which is more present in other consumer durables, and there has been a lot of news flows regarding the government reducing the tax slabs for the personal income tax slabs, and that could lead to higher spending on the consumer durable side, and I think that is what is leading to some shift or interest towards the Whirlpool's kind of the players.
Yeah, well, and the Whirlpool side of players are just doing remarkably well. Look at that, 12-month return of 84%. And mind you, these are not cheap stocks by any stretch of imagination. Pencil in the best growth estimate that you have for these companies, and with the kind of moves that they would have, they would still not look cheap. So that's the key thing. The market seems to be liking buying into companies where there is some certainty of the kind of growth that might come in, or some belief of an incentive that might come in either in the budget or otherwise, and which is why we're seeing these companies doing well. And Agam, very interestingly, the back-end manufacturers, Dixon Technologies, or maybe even an Amber, but Dixon in particular, is just quite going through the roof. I remember when the Flipkart and the Amazon sales happened and Xiaomi emerged as the most preferred brand, and it is Dixon's largest client. Somehow from those levels or those conversations, Dixon has just gone away. I mean, so white goods are a completely different kettle of fish right now.
Yeah, and to talk about Dixon specifically, I've spoken to a lot of analysts out there who are putting a target of around 5,000. And this was when Dixon was at 3,000. It's already 3,900, so it's not too far away from that being a reality. That's eventually we'll have to see whether or not that happens. But it's showing up in the numbers, showing up in the earnings. So. Well, there you have it. There is certainly a lot of momentum for Dixon. Yeah,
people may not be buying maybe soaps or biscuits, but they're certainly going out and buying white goods for sure. So it's quite stunning, really, what's happening there. Just one follow-up before we get in a technical conversation going, Siddharth. These back-end manufacturers like Dixon Technologies, does Motilal Oswal as a house have coverage here?
No, again, right now we are not covering any of these. But as you were discussing rightly, so we have seen how even in a non-season the AC market has grown in India, and I think that has led to some optimism as we saw in the year there lack of growing companies, and that has led to a lot of interest in some of these room AC companies as well as the back end from the OEM as well as the tier 1 suppliers of these players. So I think that interest will continue till the time these companies are showing growth. Valuation is something that the overall market is okay with, given that even the overall market is trading at a fair valuation, and some of these players might be trading closer to their fair valuations.
Okay, well, it's time to get in our technical experts for this morning. And right at the top, we have Shubham Agarwal, CEO at Quantsapp.com, who's joining us on the show. And we also have Shrikant Chouhan, Senior Vice President of Technical Research at Kotak Securities. Shrikant, good morning. I'll start with you. How are you placed when it comes to the indices right now? What's your view?
Good morning, Abba. See, like Nifty is very clearly into strong, intact, bullish mode. But yesterday it was like corrective sort of pattern or formation that we witnessed. It was around 12,300 levels. From there all the way we saw corrective pattern, and it was extended corrective pattern. So I think close to this 12,120, 12,100 levels, we are going to see one more rebound in the market. We are going to see some more consolidation between the range of maybe 12,050 on the downside and 12,250 on the higher side. So the ideal strategy should be to look for adding long position if there is any correction during the day. If we see any drop close to this 12,100 levels, we can keep stop loss at 12,050 for any long positions on Nifty.
Okay. Shubham, good morning to you too. Are you also of the same opinion? What levels are you watching out for when it comes to the benchmarks?
Good morning. So if we look at the index placement, very clearly the volumes and the open interest have been drying up, and we have not seen a very good rollovers happening, which is clearly indicating that the market is somewhat in a holiday mood and not much of an activity is happening. So I would just believe that, for a week more, the market can just remain sideways, and we should not be really anticipating, which direction the market would take. And roughly, I believe that 12,100 to 12,250 is the broad range where the market might see some consolidation happening. But post that, I believe that, if the market comes to 12,250 roughly, I think that would be an opportunity to liquidate some of the holdings. Because if you look at if you decompose the index, then a lot of stocks have started witnessing a short development, and that is something which is now getting scary. So no trade on index as of now. I believe that it will consolidate, but it's a sell on rise kind of a market that we are seeing on the Nifty now.
Okay, so slightly contrarian views coming in from our technical experts, but before I go ahead and take the picks onto our special segment, Bloomberg Edge, where we have Yash Upadhyay, who tells us about a trend or a pattern that the Bloomberg terminal has thrown up on a stock. Yash, good morning. What is on your radar today?
Morning, Agam. So it's a stock from your sector and it's from the IT space. So we're tracking AFL India, and there's a buy signal coming in on the back of strong gains that we've seen for the counter over the last couple of days, with heavy volume-based activity as well, and the fear and greed indicator that has given a positive signal. And now, like we always do, let's first try and understand what the fear and greed indicator is and basically how do you interpret it. The fear and greed indicator is a proprietary Bloomberg indicator, and it basically is the spread between the two weighted moving averages of the price. It oscillates on a zero basis line, so any positive reading would mean that the fear and greed indicator would change its color from red to green, and any negative reading would make the fear and greed indicator change its color from green to red, which would be a negative signal. Now, coming back to the price chart of AFL India, and what we've seen over the last two trading sessions is the fact that we have seen big moves coming in on the back of heavy volumes. Yesterday too, the stock closed almost 3% higher, with volumes almost 2.8 times its 30-day average, and with that, the fear and greed indicator in the lower panel, that has given a positive crossover. So it had been in a corrective phase. It had gone from the levels of close to around 1750 to the mark of almost 1340 or almost 1400, and then it has now managed to gain over the last two trading sessions, and the fear and greed indicator giving that positive signal. Now the pink line over here is of importance as well. That is the 55-day exponential moving average. When it came down in its corrective phase, it took support around that mark and it bounced back, but then again it was in a sideways trend, and then again around the mark of 1400 we saw that support coming in, and with volume based activity we saw the stock move up. So even from a long-term investment perspective, someone could look to add on lower prices close to around the 55-day exponential moving average, but right now the indicator is giving a positive signal, so one could go long in the counter.
And what about the historical results based on back testing, Yash?
So Agam, it has worked fantastically, because 3 out of the last 4 times that the indicator has given a positive signal, on an average over the next 10-day period, the stock has managed to run up close to around 7%.
Well, AFL India and the new age businesses continue to drive ahead. Let's see if this one does that too, based on what the Bloomberg terminal is indicating. Yash, thanks so much for putting that into perspective. But if this is one idea which the terminal indicators are giving, what is it that our experts believe could be done? Shrikant, I'll start off with you first, your stock-specific recommendations for the morning.
We are specifically bullish on metal companies, because there we are seeing long-term reversal patterns on quarterly as well as on monthly charts. No doubt that few steel stocks are very close to their overbought levels, like Tata Steel or Jindal Steel and Power, but JSW Steel is still very close to its short-term breakout level, around 270, 271. So from here we can see the levels of at least 280, 283 on the higher side. So here we should look for adding long positions on JSW Steel with a stop loss at 265. The other stock on which we are bullish is from the auto space, and that is Maruti, which is currently around 7240, 7230 levels. There we are seeing furthermore like retracement or upside activity if we see any correction in the first half. So close to 7230, 7240 it's a buy, with the stop loss below 7150, and again we can see the levels of 7350 to 7400 in next few days. So it's a positional call. So buy at current levels, buy more on a few more declines.
Okay, and Shubham, stocks that are looking interesting to you this morning?
So a couple of calls, one on the buy side and one on the sell side. So the first one is a buy on Jubilant Food, and if you look at the setup there, the stock has been in a long and winding cycle, which is indicating that every time a pullback happens, that's an opportunity to buy. And recently we saw the stock retesting its important support of 1575, 1580. So a mean reversion is what is expected in Jubilant Food. So a 1640 strike call option can be bought for a target of 55 rupees with a stop loss at 28. And a sell call on Aurobindo Pharma. So if you look at the pharma as a sector as a whole, shorts are getting developed on the sectoral front, and we have seen that Aurobindo Pharma has been an underperformer from that space. So after this pullback in Aurobindo Pharma and a breakdown that happened yesterday, there's a good probability that we might see some more follow-up selling coming in Aurobindo Pharma. So 460 strike put option can be bought for a target of 28 rupees with a stop loss at 15.
Right. Siddhartha, can you come in on Maruti Suzuki? There's some sort of consensus building up, and of course that's evident in the stock price as well, in the way we've seen it move off late. That said, I'm not no one to say, but at least as the analysts I've spoken to are not exactly certain that the recovery is still here. What is your view on something like a Maruti Suzuki, considering it is a market leader with respect to passenger vehicles?
Agam, so overall on the auto space, we believe that a recovery is definitely on the cards, and in the various segments of within the auto, we believe that the passenger vehicle segment is something where the recovery could be seen faster compared to a CV segment, where based on our interaction with some of the channels as well as management, the recovery seems to be a little more delayed. Having said that, if you see, there are several challenges in the near term for the auto sector. One of the key things is the transition from a BS4 to a BS6, and the way the models would change. We have already seen there was some kind of improvement in demand during the festive season, and even in the December season where there is a lot of year-end discounts, the companies have been able to increase prices going into the new year. Another positive factor for Maruti has been that while they had earlier said that they will completely exit the lower end of the diesel segment, now they are reconsidering that, and some of the older models that were to exit by January itself, now they are extending on back of the demand they are seeing to even Feb as well as March. So overall, if you see, valuations are something which may not give you a huge upside in the near term, given the several challenges in the near term. But from a long-term perspective, definitely we believe that Maruti could come back, and there could be a good recovery in the growth as well as in the share price.
Okay, well, we just have about 15 seconds left to go before we have VC pre-open, and we are looking at strength in Shanghai and the Hang Seng, which both of them are advancing. Well, the SGX Nifty is also looking up at this point, so we are expecting a positive opening, but I suppose the pre-open will confirm that, and we certainly are looking at an uptick on the Nifty 50. It's not the case for the Sensex, but we're going to have to wait for these rates to settle down and to see whether or not, well, there is something that may be brewing. Sensex certainly looking down by as much as 1%, and the Nifty 50 quite the opposite. But let's start by talking about Reliance Industries, which has been coming off over the past few days. In fact, 3 straight days of declines. But today it seems that there may be a bout of short covering. We did see some amount of volatility in HDFC Bank as well. In fact, Reliance along with HDFC Bank were the two stocks which were weighing down on the indices yesterday. HDFC Bank looking at marginal up move here as well. Among others, we are seeing some amount of traction, but because of the oil move, let's also bring up the OMCs because they will be in focus. When again we are seeing a 0.5% gain for BPCL, HPCL as well as something that we have been discussing that is looking at a 0.5% gain. Indian Oil Corp also marginally in the green. So that takes care of a lot of weightage on the indices. Let's also pull up something like an information technology sector, so something like TCS or an Infosys, and see what they are doing and see whether or not they can give some support to the indices today. TCS is up higher by around 0.5%, and Infosys is higher by around 0.3%, 0.5% gain for HCL Technologies too. But on the whole, it's been not necessarily a very upbeat market, though we are seeing about 0.5% up move for a lot of these stocks. Perhaps potentially that's the reason why indices are currently looking in the green. Neeraj.
Yeah, well, watch out for Reliance and HDFC, the two top losers yesterday, and let's see if they bounce back a little bit. Not too many newsmakers. Maybe I would want to watch out for an Igarshi Motors. The last few days, the stock has been on a bit of a roll, and maybe that one could start off positive again today, 2% higher. Yesterday, due to some strange reason, the likes of Rane Holdings, Rane Madras, Rane Brakes, the Rane Group stocks were up and active, and maybe they could be active in today's session too, up about 5%. Really couldn't find anything fundamental out there, but maybe their stocks could do well. And from a news perspective, HG Infra, it's a small stock. It's been declared an L1 bidder for a HAM project in Haryana. Maybe HG Infra has some gains. Let's give these rates a chance to stabilize before we talk more about them. Ms. Siddhartha, if I leave out Adani Ports, which other Adani Group stock do you guys have coverage on, and what's the outlook on that stock?
So Neeraj, we are not tracking any of the Adani Groups as of now, so will not be possible to comment on that.
But all of these stocks are very active, and Adani Green continues to stay on course for further gains. Look at that stock. It's just gone, it's zoomed into another orbit really the last few days. 164, this would be the third day of a positive move for Adani Green. Let's wait and watch if there is more in store. Shubham, do you track any of these stocks, Adani Green, Adani Transmission, Adani Gas? And is there a view that you have here?
So especially on Adani Greens, Neeraj, if you look at the price setup there, a very secular trend has been witnessed, and the way it has been moving up, I think may not be a good opportunity to buy it right away. But if at all a pullback happens, and if it is available around the range of 145 to 150, I think it's a good, it will be a good opportunity to buy on pullback. So overall, the trend is positive, which can continue to, move higher for a target of 180, 185. But buying on pullback should be the strategy, at least on Adani Greens.
If we get one, that's the point about Adani Green. Somehow this stock is just another point. But I think Shubham's point is well taken as well. These stocks are just moving up so high and so fast that the risk reward from somebody who's trading it might be if you get to buy it on a dip and not otherwise.
Yeah, right. Of course, in the case of Adani Green, that certainly seems to be the case. But we were talking about OMCs and on account of the big price change in oil prices, but we also have a technical view requirement from, well, a few of our viewers. Let's pick up HPCL in this case and get a technical check here. It's at 125.9. Shrikant, any trade here, levels that you'd watch out for towards the long or the short side?
I think say HPCL, IOC, even BPCL, they have corrected very well to their important support areas. In fact, IOC and HPCL, they have fallen vertically from their highs of almost 300 HPCL was trading, and from there now we are seeing the levels of 258, 260. So furthermore decline up to maybe 250 is not ruled out, but the overall formation is suggesting us that now they have corrected almost and completed almost 80% of their entire up move. So which clearly shows that these stocks are into oversold zone. Maybe this factor of rising crude prices may create furthermore, so it may add furthermore short positions on the stock, and that will help the stock to move in the near future. So we are of the view that we should look for adding long position in HPCL as well as on IOC from current levels up to 250. I'm not expecting stock to trade below 250. So we can keep stop loss somewhere around 245, and we should look for adding this stock with a positional view.
Okay, maybe a positional view on that one. Now, the other is, Siddhartha, Khemka, I want to come to you on a lot of these smaller financial names which are moving about and creating wealth. So yesterday, MAS Financial, which is MAS Financial, went up about 6-7%, and that stock is continuing to create wealth. AU Small Finance Bank, for all the questions that people might have about SFBs, this one largely has done very well for itself, and a clutch of others, right? The newer listings as well, a couple of them which might also be active. Do you have coverage here in particular if you look at AU Small Finance Bank?
So we do have a coverage on AU Small Finance Bank as well as on MAS Financial. May not be on some of the other newer listed microfinance companies, but we are tracking the smaller finance companies very closely. And if you see, some of these names have benefited in the last 1.5 years, where the larger ones were struggling both in terms of cost of funds as well as in terms of demand for their financing and a lower growth. These companies were largely stable, growing at a steady pace. They had a higher cost of funding, but they were mitigating it by lending to segments where they were able to extract a higher yield, and that somehow has been continuing for some of these names. AU, for example, has leveraged technology to lower its costs to make that profit, to improve the profitability. Having said that, these stocks have moved up sharply in the recent past and are closer to our target price, although we are continuing our positive view and a buy both on AU, where we currently have a target price of 800, as well as on MAS Financial, again where we have a buy rating. Again, target price is 830, which is closer to the current price.
Okay, let's also talk about Yes Bank. And Shubham, if I can come to you on this one. This one is a hard stock to trade, and while we did see some amount of weakness yesterday, it does seem like it's looking at an up move today. What would you tell viewers who are interested in dealing in Yes Bank, and if at all there is any advice, how would you decipher levels to watch out for in something which has seen such wild swings?
So if you look at the setup of Yes Bank, very clearly the long-term trend is still negative, and the problem with the stock is that it is heavily over-owned, and that is something which is not letting it see any kind of a pullback. And if you look at the IVs for the stock, the IVs right now is about 110%, which means, and generally when we see any stock which has an IV of higher than 80, 90, it generally means that the longer term trend is still negative. So the strategy very clearly on Yes Bank would be to sell on any pullback and exit. And in fact, if we do see a pullback to the level of maybe 47, 48, I think that will be a good shorting opportunity. So overall view is negative. Sell on any rise will be the strategy on Yes Bank.
Yeah, well, and best to be trade with extreme caution. Yes Bank, frankly, some of the experts are getting it wrong, so you never know where you might be caught on the wrong side. 2 or 3 mid-cap names, and very quickly, before we get into the final fundamental idea from Siddhartha Khemka, a small technical perspective on a company that has been doing very well in the last few days, APL Apollo Tubes. They've hired Amitabh Bachchan as the brand ambassador and sorts, and I think from the feelers that we get, a lot of their competitors aren't quite are struggling, and therefore APL Apollo is a bit of a free line to increase sales. The stock has done well, Shrikant. Can you look up on the charts and tell us how does it look?
See, if we, I think, go through with the pattern of it, then on chart also it is very clearly suggesting us that it is going up gradually, heading upward towards its previous highs, and now it is very close to its previous high of 1720, 1730. So the overall pattern is suggesting us that the stock has already formed bottom in the month of February 2019. So 1 year back already the stock has formed its bottom. Now the stock has established one more higher bottom. So it clearly shows that the stock is into uptrend, not only on the short term as well as on the long term, and it is heading for the levels of at least 2200. That is the overall view that we can see based on the long term pattern of it. In the short term, yes, we can see the levels of maybe 1830, 1850 on the higher side, but eventually I think the stock is heading for 2200.
Wow. Well, that's some bullish view, all right. Let's see. It's not a very expensive stock as well, by the way, but it's a commodity converter. You've got to keep that at the back of your mind when you're looking at a stock like APL Apollo Tubes. But we're minutes away from market open. The pre-open rates have settled down. We might start up about 1/3% higher. Let's tell you all that you need to know to stay ahead in trade today. First up, the Reserve Bank of India has announced its second round of Operation Twist, aiming to ease borrowing conditions in the market.
The SEBI has fined ICRA and CARE Ratings for failing to carry out proper due diligence while rating NCDs from IL&FS.
OMCs will be in focus as oil prices are set for the biggest monthly gain in almost a year amid speculation of shrinking supplies and trade optimism.
And a couple of payment defaults. Sikal Logistics says it will default on payments of NCDs worth 5.5 crores due to a cash flow mismatch. On the other hand, Simplex Infra has defaulted on payments of NCDs worth 4.85 crores, which was due on December 26th.
CARE Ratings has downgraded long-term banking facilities of Hindustan Aeronautics worth 7,300 crores to AA+ from AAA. Outlook is kept stable, unchanged at stable.
And lastly, LIC has raised its stake in Adani Ports to 11.8% from 9.8% between December 8th to December 23rd.
And some strange moves happen. Jet Airways looks like starting off 5% higher. I don't know who would want to buy into it, but hey, there is some gains out there for Jet Airways. Rane Madras up about 10%, so that's the other small cap stock that you need to monitor. And from other names, I think Indoco Remedies looks like starting off lower today in the pre-open session, down about 6.5% in the session today. But 2.5 minutes left. Siddhartha Khemka, before we thank you, one name that you believe is a good name to bet on for year 2020, something that you're convinced about?
So a name that comes to my mind is in the larger mid-cap space is Jubilant Foodworks. The company is well placed compared to its peers, the likes of Yum Brands as well as Burger King, which has also filed the prospectus for an IPO. We believe the company has been operating at a good profit margins compared to these brands which are loss-making, and just recently Westlife has turned profitable. So if you see in the entire competitive landscape, Jubilant has shown that despite a higher base, they have been able to grow at a much faster pace this year, and that growth should continue. Also, the benefit of the recent tax cut will accrue maximum to Jubilant Foodworks, given that its profitable track record compared to others which were loss making. So we believe that's one stock that could do well in 2020.
Okay, well, speaking of Jubilant Foodworks too, Shrikant, do you have a view here, because we're starting to see some traction here as well?
Yeah, I think the stock is very clearly forming ascending triangle on daily basis, and the stock has spent almost 3 to 4 weeks between the same. So it clearly shows that it's a continuation pattern, and above 1640 we can expect further more activity in this stock. Even Shubham has also covered this stock in today's date. So the overall formation is suggesting us that the stock is eventually heading for 1680, 1690, but in the short term, at least 1640, 45 is not rolled out.
Okay, we just have less than a minute left for opening, so I'm going to quickly take our experts' top picks. Well, Shubham, I'll come to you very quickly. Your top pick for today?
So one more stock that I would like to add on the buy side will be PVR. PVR has been consolidating for some time, which has formed a continuation pattern. We expect a breakout to happen there. So it's a buy for a target of 1875 with a stop loss at 1798.
Shrikant, how about you?
I think along with these stocks, we should also concentrate on Escorts, which is currently trading at 620, 625. There also we are expecting activity up to 640, 645. So we can keep stop loss at 605 for the same.
Okay, gentlemen, stay on. We'll just try and take in your opening thoughts post-market open, because we'll start off in the green. So it'll be important to get your perspective as to what to do in a scenario like that. 5 seconds left for the markets to kickstart trade. Maybe 1/3 of a percent or thereabouts in the green. Well, which is desirable after the kind of move that we had yesterday in the large caps. Actually, more than that. No, actually about 1/3 of a percent. So the Nifty 50, 43 points higher, 0.36%. The Sensex, 121 points, 0.3% or 0.29%, and the Bank Nifty 74 points, just about 0.21%, cooling off a little bit as well, but steady at around 0.2 or 0.3% seemingly for the large cap indices. The mid caps and the small caps, which did much better than the large caps yesterday, start off in the green again. So good start. Let's get the heat map up on the screen and let's see what's moving and what's not. Okay, from amongst, by the way, look at this, a lot of green, very little red. So that's the key thing, and not too many losers. But I want to talk about the gainers first. Yes Bank up about 1.85%, State Bank of India about 1.3%, Reliance Industries, I saw it in the list of the top gainers right here, about 0.8 or thereabouts for Reliance Industries. It's very volatile, but it's doing well for itself, and after a series of downticks, Reliance starts off positively. Let's see if it manages to hold on. I think it'll be a key question to our experts. Bharti about 0.66% higher after a bit of a slam dunk yesterday. There is some strength in Coal India and ONGC, so select PSU is also not doing too badly. What's not doing well? Well, Bharti Infra 0.7%, Bajaj Auto, NTPC. So not too many losers. Not that the gainers are really roaring, but there are a fair degree of gainers, and which is that the market is starting off on a fairly decent note. Speaking of gainers, let me just quickly highlight a couple of stocks or 3 or 4 names which were trading near fresh highs in trade yesterday, and let's see how they have started off today, if they are still trading near fresh highs. Whirlpool, after a big up move yesterday, just cools off a little bit, but let's see if it bounces back from these. As also Phoenix Mills, which was at about 800 yesterday and currently just about 1.5% higher. Muthoot Finance too, very flat. So yesterday's gainers are not starting off in a big way. What about maybe a couple of others? Dixon Tech, Deepak Nitrite. Well, these two start off well. Dixon are nudging its way towards 4,000. Deepak Nitrite all going to about 375 odd. So these stocks continue to do well. But not a big bang start for yesterday's winners, Agam. What is it that you're spotting?
Kaveri Seed Company is certainly standing out here. The top gainer on the NSE 500. It's up 8% and is gaining from the second by quite a margin. The second one on the list is Diwan Housing Finance, which is also up around 5%. What may come as a little bit of a surprise after what we heard from Care Ratings, that is also up and about. That's gaining around 3%. But we must remember that there's some amount of catching up for Care Ratings and ICRA to do with respect to the kind of up move that we've seen in CRISIL of late. Besides that, we have Arvind Fashions, which is up 2.5%, and well, Dixon Technologies has already been addressed, but well, that's also up around 2%. Sundaram Fasteners is the other one, which has well come back on this list of advancers, and that is also doing well, up 3.6%. On the losing end, we have some weakness in Alchem Laboratories, that's down 2%. Dishman Carbogen, which was gaining yesterday, it seems that well there's been some amount of selling. So while it did see an up move around 9%, today it's down. Today we have Responsive Industries, which is down around 2%. But not too much to speak for otherwise. It does certainly seem that the momentum is clearly with the gainers, and that is evident in your advanced decline ratio as well, because on the NSE 500 you have 4 gainers for 1 loser, as is the case for the National Stock Exchange too. So well, certainly turning out to be a good Friday for the broader markets in India.
Yeah, well, certainly so. Quick opening thoughts from our expert, Shubham. I wanted to ask you about Reliance Industries. After days of correcting, it is looking like starting off okay today. Can it build on? Would you be a bottom buyer here, or would you believe that this will get sold into?
So not yet, Neeraj, because if you look at the correction that happened from 1620, since then the derivative data has been very negative, and we have seen that the stock has now entered a short covering cycle, which is indicating that today's move might just be a short covering rally, which is very temporarily lived. So I think maybe 1550, 1560 would be a maximum upside for the stock, and then we might again see a decline happening. So I would be a buyer on Reliance only below 1480. So for now, I think we should avoid this move, which seems to be temporary.
Okay, just very quickly want to mark the bond yields as well, and after correcting quite significantly from the 6.82 mark, the yields have come off because of the announcement at about 6.50. So one more day of a decline for the yields, 6.5080. So a bit of a correction out here. Shrikant, the last time that this happened, you had recommended buying into banks, and the banks had done very well then. Are you buying banks today as well?
Yeah, still like even State Bank is showing a lot of strength. Today also it opened above the highest of the previous day, which is positive. And it shows that again the stock is heading for the levels of at least 339, 340, which was its previous high. And maybe we may even see the levels of 345. So it's a buy at this price. The stop loss is very nearby. We can keep stop loss at 330 for the same. And we should look for adding further a few more stocks from the PSU basket.
Okay, Deepak Jasani, head of Shubham, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time. But Deepak Jasani, head of retail research at HDFC Securities, joins us right now on the show as well. Deepak, good having you. Thanks for joining in. That's the second operation or the OMO announced by the RBI in about 7 days. Does this make you constructive on MTM gains for PSUs or banks at large, and therefore, with that reason combined with others, does it give you further ammo to go out and buy into banks? And what kind of banks then?
Yeah, good morning. We are in the near term, we are constructive on equities. We believe that equities have legs to go up to 12,800 over Jan-Feb from here. So in that sense, the latest RBI move is also welcome. The RBI is concerned about the transmission of the lower interest rates into the system. So this is one more way in which they are trying to do it. Whether they will succeed or not, only time will tell. But the fact is that they are making their full effort. They are trying various ways and means of achieving this transmission. So banks will gain in terms of MTM, but 31st December, of course, if we stay around these levels, then it will be a good thing for banks. But 31st March, we don't know. There is a budget in between. So a lot will depend on what are the provisions in the budget and what is the fiscal deficit estimated. So based on that, the bond yields will sort of settle either at similar levels or higher levels in end of March.
Okay, and Deepak, how are you placed on small finance banks specifically? Because we do have a lot of questions here. Anything that you like in the sector?
Small finance banks, I think we have a buy on AU Small Finance Bank, and we like the stock. Of course, the entry levels can be sort of fine-tuned a little bit. Ujjivan Small Finance has just recently been listed. We are looking at this stock. The space looks interesting. I think the NPA levels of the individual banks, the trend of the NPAs, as well as the deposit franchise, these two things will be important as far as interpreting small finance banks are concerned.
Okay. Deepak, the last few days we've seen one space which has been doing very well, which is specialty chemicals, gain even more traction. Somehow December has seen a flurry of activity in terms of buying activity into all of these names. Navin Fluorine, SRF, Aarti Industries, all of them trading at highs. Even the commodity chemical companies, the likes of Deepak Nitrite, are doing well. I'm sure you guys have coverage here. What is the favorite at HDFC Securities?
So we have a coverage on SRF, Navin Fluorine and Vinati, all three, and all three have been doing quite well so far. I think the key reason behind these stocks doing well is that after the large caps having performed for quite some time, now the focus is shifting towards mid caps, and within mid caps, I think the high valued proven companies are doing well. So people are not worried about slightly higher P's in this case in companies, but they want some visibility, some assurance about corporate governance, some visibility on the business model, and that is why these stocks are gaining strength in the shift from large cap to mid caps, the quality mid caps.
Okay. So well, Deepak Jasani seems to be liking all of them, at least the three names that they mentioned, and do watch out for them. Shrikant, any thoughts here? Particularly a stock like Navin Fluorine, it's done remarkably well in the last 1 month.
See, it is going up and up gradually. The stock has spent a lot of time between the range of 900 to almost 575, 550 on the downside. It's a period, it was like for almost 2 years. So while looking at the overall formation, I think the stock has completed its one more corrective and continuation formation between the range of 900 and 600 on the downside. So if we add these 300 points on the breakout level of 900, then we can even see the levels of 1200. So that should be the final target that we can see on the chart. And in case if there is any correction, then we should look for adding long positions, because the volumes are quite like on the stagnant side. The average volumes are always on the higher side on weekly and monthly basis. So it shows that there is a specific buying interest, and the stock can move to the levels of 1200.
Okay. Deepak, every now and then we have a question on ITC. If you keep the taxation and regulatory overhang on cigarettes aside, how do you rate ITC as compared to some of its peers? Because it's clearly still going at a significant discount, and you know it's not really turning for the better.
Right. We also have a buy on ITC. I think the stock has clearly underperformed all this while. Now, of course, the fear of higher taxes is what is being quoted as the main reason for ITC not doing so well. But what we think is the company needs to be split into 2 or 3 companies. Only then the value unlocking will happen. Some people are clearly not comfortable owning a tobacco stock in an era where ESG is gaining momentum. So where I think although the company has denied time and again about demerging or splitting the company into 2 or 3, I think it is if this underperformance continues for a few more months, then the management will have to take up the proposal. FMCG, which was a cash guzzler so far, now has turned around. Paper and hotels typically are businesses where the returns are not commensurate. So ultimately, Whether they want to continue with these two going forward is a different question. So paper and hotels, FMCG and cigarettes, I think these three, if they split into three companies, probably it will sort of gain interest or from investors who are interested in these specific businesses.
Well, but if the GST Council's last meet, which I failed to get any decision, but at least didn't get any negative conversations around again taxing cigarettes as a source of revenue is any indication, maybe there are maybe times might be slightly different going ahead this budget. Let's see. But Deepak Jasani is right. The overhang remains on these stocks almost every single time. Deepak, so let's try and sum up this conversation. You've spoken about a few themes that we asked you. As we hit 2020, to your mind, from amongst the plethora of names that your house is recommending as a portfolio building strategy, what is that one name or what are those two names that you believe should be a core part of the portfolio, might give the best returns over the course of the next 1 year?
Difficult to pinpoint one or two names, but I think broadly we like metals as a space for 1 or 2 quarters. So maybe they will do well from now till say April, May or June. So that is a good space to remain invested. Till the end of the year, probably they will correct also. So from December to December, they may not do well. But during this first half, I think metals as a space could do well. PSU, now if BPCL, of course, it has been postponed by going by reports. But if government somehow manages to gather courage and does a strategy in divestment, then PSU as a pack could also outperform. And apart from that, yeah, consumer space we like. Consumer and BFSI are two other spaces we like. But there, again, one will have to be careful about the valuations one is paying. So maybe on some small dips, we can look at these two sectors.
Okay. Deepak, we'll leave it at that. Thanks much for taking the time out and joining us and giving us that perspective. Really appreciate your time. Shrikant, before we wrap up, just one thought on Bharti Airtel. We've spoken about Reliance, which was a top loser yesterday. Yeah. Bharti Airtel too cracked quite strongly and came back in the session today, or has come back in the session today. How do the charts look there?
See, currently I think Bharti is forming some consolidation formation. It was around 420-25 levels. From there all the way it recovered back to 460-465, but the overall structure is still intact. And based on its long-term chart, I am very clear that it is going to cross its previous high of 550-560. But in the short term, close to 470, we can see some resistance, some profit taking or some liquidation of long positions. But any dip from current levels will be an opportunity for short term as well as positional traders to create long positions, because eventually the stock is going to cross its previous high.
All right. Well, on that note, Shrikant, we thank you for joining us and taking us through your views on the markets. Thanks very much for joining us. We're going to slip into a short break, but don't go anywhere. Coming up next, we talk about the Indian economy with DK Joshi of CRISIL and about Dixon Technologies' competitive positioning with its managing director, Atul Lal. Stay tuned and we'll be back in just a bit.